S.D. Bullion.
This is the Doc with the SD Weekly Metals and Markets Update. Joining us today is regular SD contributor, goes by the handle Flying Wombat on the site, Eric Dubin. Thanks for joining us, and why don't you tell our listeners a little bit more about yourself, Eric?
Well, hello, Doc. It's great to be here. I've been using the site for over a year now, and I really like Silver Doctors quite a bit because the signal-to-noise ratio is really favorable. I mean, if you go on to other sites on the net, people are screaming at each other, and there's a lot of riff-raff going on and whatnot, but the focus on metals at Silver Doctors is pretty consistent, and the level of commentary is something that I find pretty darn cool, so it keeps me coming back for more. I've been in finance pretty much since about 1990. In my mid-40s. I've been in the industry in part for a good chunk of time, but then I frankly just burned out. I didn't like the excesses of the technology boom and all of the craziness of the WorldComs and Enrons and so forth of the last major debacle in our big bubble cycles that we keep going through. From that point forward, I pretty much went on my own and managed money for a small number of clients myself and did some writing and basically kept up a private practice of consulting. I've always been on the outside of the mainstream of Wall Street as a buy-side analyst as opposed to sell-side, where I wasn't pushing products or representing any particular brokerage firm or all of the other things that come with the sell side that are not very ethical, and the tech boom had lots of examples of that we can look to. So I've had a mixed background both in technology and resource sector in terms of my focus as an analyst and portfolio manager. Going through the whole tech boom gave me quite a bit of insight to be able to spot the boom in real estate and how unstable it was and how we were basically going through all these cycles of ever-increasing bubble blowing in our economies and the ever-increasing concentration of the financial sector vis-a-vis the real productive economy. When it came to the tech crash and ultimately the real estate crash, it was pretty much just a rehash as far as these cycles go in my mind, and I came aboard precious metals and advocating the purchase of them all the way back in 2001.
All right, well, let's start right off with the metals here. Silver closed at 28.87, around there. Gold just under 1,600, 15.93. Appeared really for the last 2 days that the cartel was defending the 29 level in silver and 1,600 in gold pretty strongly. Silver, really the main level that they're worried about is 30. I think that's why they've been trying to keep it under 29. And for the week, we had a range. Silver traded in a pretty tight range still from, I think the low is somewhere around 28.50 to 29.40 or 50. In gold, we dipped down towards 15.60. I think 15.65 might have been the low this week. And the upper range tapped 1,600 a few times. So what are your takes on the gold and silver market, Eric? I know Jim Sinclair this week, I think Wednesday or Thursday, has stated that a bottom is in gold, and that once it crosses 1,600, we won't ever see 1,600 again.
I think that we
so
have
what are your takes on the metals
bottomed.
here?
It's hard to make calls like that when we're in the heat of the phoretic volatility that we've been seeing. But if you look at silver as an example, it was back in February of 22nd when we had a significant decline with high volume, other than very briefly going below that level on March 4th, and in fact having a small upward side reversal on that day. We've pretty much been in a tight trading range, 29.50 or so on the top, 28 or so on the bottom, and bouncing back and forth between that range for the better part of 3 weeks, even though the majority of the fireworks was previous to these last 3 weeks. It was in the early part of February that we started going the cascade waterfall down. So, the sentiment in all respects, no matter where you look, has basically been as low as it can get and has been for the better part of this entire bull market run, no matter what you look at, whether it's relative strength indexes or all the other statistical things that you can do from a technical analysis point of view, to even, the number of emails that you get where people are saying, hey, calling you names and being frustrated and whatnot, or even the pundits together, picking on each other and nitpicking about points and so forth. There's been a pretty noticeable uptick in that kind of activity going on. So, at this stage, it really does look like there's been a washout. And commensurate with that, we have hit $26 and change 4 times as a low in silver in the last 2 years. We hit 3 times in 2011, once in 2012, and if you look at a big picture chart, it shows that despite all of the pain that we've been going through, we are nonetheless respecting that $26 low. And in gold, there's a very similar picture. And I think in gold in particular, we really do need to take into consideration that China and other central banks are not looking at these markets in the context of standard investment metrics. They're looking at it in the interests of geopolitics. They're well aware that at some point we're likely going to have some kind of a new currency regime where the dollar as a reserve currency is transitioned to some other kind of system. And whatever that system takes hold as, it will have a role for gold. So that's underpinning the entire precious market, the precious metals market at this point. It's very clear that as we have moved over the course of this bull market, China and Russia and other central banks have just been upping their bid levels, their stink bids, so to speak. And I believe that 1,500 on gold and, even to some extent, silver is likely being purchased by central banks like China. Certainly they're public, and the Chinese are making a public policy of encouraging their citizens to purchase both gold and silver because that, in fact, is more productive for their foreign exchange flow as opposed to putting into further property bubbles and speculation on their stock market and so forth. So, Doc, I think we bottomed. There's a possibility that we will hit some further downside, maybe even as early as next week as a final test. But as it stands, it looks like that whole thesis that J.P. Morgan has been trying to cover some of their shorts and reposition themselves, and other HSBC and other buoyant banks that manage the gold trade overall are in fact doing the same thing. It may be a sideways trade pattern for quite some time just to allow people to slowly heal their sentiment and come back to the market, but as far as further downside is concerned, the risk-reward here is just phenomenal. I mean, we know that inflation is coming. We know that it's very likely that we'll have a currency reset of some sort on a global scale. The role that gold and silver play to protect investors in those scenarios is paramount and will be coming more to people's attention as we go forward through the rest of this year.
One thing you touched on with Russia and China accumulating the gold reserves, one thing that could potentially really change the silver market, there's nothing official yet, but I'm starting to hear rumors that 1 or 2 of the Russian finance ministers are looking into adding silver reserves, making silver part of Russia's foreign exchange reserves, and that would be just a complete game changer in the silver market. But then also, just kind of piggybacking what you mentioned with the sentiment, and the sentiment especially seeming to indicate we're at a bottom. What's really just astonishing to me is the volume of physical, especially silver sales, with sentiment as bad as it is. I mean, the U.S. Mint has sold just about 12.6 million ounces already. It set a all-time monthly record for January, 7.5 million ounces. Monthly February record, 3.36 million ounces. And it's on pace for a monthly March record. So, I mean, the U.S. Mint has already sold, about 33% of entire 2012 sales. It looks ready to just absolutely shatter the annual record this year, and yet the sentiment is the worst it's been seen in the bull market. So all the statistics out of the U.S. Mint signal massive demand for silver, and then what we've been seeing at SD Bullion with our suppliers is back in January, as most of our listeners are aware, there was the mint shut down, the U.S. Mint shut down, and there was a supply issue with Eagles, but really it appears to be the shortage is exacerbating and spreading to all of their products. I mean, everything from 90% silver. Some of the largest wholesalers in the country are now running 6 to 8 weeks delays and are upwards of $2 to $3 over spot. Like generic. And
that's actually pretty astounding. I mean, I don't know how many of our listeners really appreciate how big of a premium for 90% junk silver that is, but it was only a couple of years back that you could frequently find 90% silver at 5% below spot offered by your average coin store.
Right, and these are the largest. This isn't like a small coin store. These are the largest suppliers in the country, and they're all out and they're all on delay. Generic rounds, they're on delay now, 2 to 3 week delays. The U.S. Mint is now allocating. The suppliers are allocating. It's about a 2 week delay on Eagles. Maples are in allocation, so pretty much across the board, physical silver shortages popping up.
Yeah, and I'd like to also underscore something that you mentioned that it may not be really apparent to a lot of people initially, because when you look at stock market fluctuations and whatnot, and you go through a period of despondency and folks are basically running for the bunker, volume typically will fall. I mean, sure, you'll have a spike perhaps maybe when there's an initial news event that makes people want to sell, but over the course of a 2 or 3 month period when there's just a growing sense of bearishness in the stock market, you'll tend to see things just kind of slow down, and people will be running for their bunker, not paying much attention, and volume declines, which is actually kind of what we've been seeing for different reasons in our market now. But anyway, the point being that here we have physical silver sales flying through the roof and volume of coin sales just exploding, and bars. But at the same time, we have the mainstream media and everyone else in the traditional financial sector trying to convince people that there's a bear market here beginning and that everybody is not interested in buying this stuff, when in fact the physical market is showing plenty of instances of distress and tight supplies. It's not to the point where, we're talking about a COMEX shutdown, and force majeure, but nonetheless, the signs of physical market tightness are all around us.
Touch on or get to the story. The Wall Street Journal broke the story on Wednesday night that the CFTC is having internal discussions regarding manipulation of gold and silver on the daily London fix. I think yesterday evening Bart Chilton was interviewed, and he essentially said that with all the banks manipulating LIBOR, something that we definitely should be able to and should be looking into, whether they're all also manipulating the daily London fix. And I think both you and I, as well as all of our listeners, know what's actually going on.
Isn't it kind of funny that comes out in the same week that the report on J.P. Morgan from the Senate Investigative Committees basically is pointing the finger at them having done some very unsavory things in the marketplace. It's almost as if the CFTC is saying, oh, okay, well, the Senate is here pointing the finger at J.P. Morgan. Maybe we should start steering media attention to London. There's definitely some smoke here and probably fire.
Definitely the fire underneath the smoke. What are your thoughts on, is the CFTC just blowing smoke, or do you think London is going to be where it's going to blow and we will see a full-blown scandal like the LIBOR scandal we saw in 2012?
That's a really hard question to answer, because so far, at least, if history is any guide, it's clear that the CFTC is going to tap dance and put on a good show, and perhaps maybe it's even fair to say that Bart Chilton is just performing the role of good cop and nothing more. I certainly look at him in that context and see him that way. But, the bottom line is that at some point, if the bullion banks managing the cartel are not able to get out of their short positions, and the market does blow up, then of course there's going to be a mess. And as is frequently the case when markets fail, we have big gatherings of Congress people asking the executives, hey, what'd you do? Why'd you fail? And things are attempted to be fixed in retrospect as opposed to proactively dealing with the situation. That's the norm. That's the pattern we've seen pretty much throughout all of these bubble and burst cycles, and I don't think it's going to be any different with the CFTC this time around. But who knows? Maybe they will, in an effort to shine more light on what's going on in London, they'll focus a little bit more on the whole process of the AM and PM fix in their market. But it's not likely that that's going to lead anywhere, I suspect.
Before we wrap up, let's discuss the outlook for the next week. I know Jim Sinclair has made a couple calls or statements that by his meeting in New York on Wednesday, gold will be moving up. To me, it looks like gold's getting ready to take out 1,600 again to the upside, and silver probably won't hang around under $30 much longer. If we do have a bottom that's in, what are we looking at? Are we looking at a sharp V-shaped entry out of that, a long, slow climb in the metals?
I suspect we'll probably have about a $3 band volatility range on silver, where bottom is 28 and trying to get over 30, and then eventually getting over 30 and testing 31 or so over the course of the next month, roughly. is the kind of pattern that we'll have. But as far as being able to call the bottom now, it's harder. But in 2 weeks' time, when we see higher lows and a general drift upwards and people returning to the market, I suspect that at that point you see a complete change in terms of the sentiment, because it's already beginning to show that kind of pattern where you have, like I had said before, the spike downs in February 22nd and the stabilization and moving sideways at this point that the prices of both gold and silver are showing. It's a matter of just repairing the damage, and we still have the Treasury and Fed working together, where the Fed is purchasing upwards of 50% more of the Treasury issuance. We still have the issues of inflation brewing throughout the whole global economic system. In time, I believe that we'll be looking back 3 months from now as if this was just a painful interlude in a continuing bull market in both gold and silver's prices higher.
The week in gold and silver, we had gold closing at just under 1,600, silver just under 29, looking like potential bottoms may be in. The U.S. Mint sales up to 12.578 million ounces, and we have the CFTC opening initial internal discussions on whether the London fix is being manipulated in a similar fashion as LIBOR. Tune in next week, see what the metals and the markets bring next week. Thanks for joining us, Eric.
Thank you.